Property giant Growthpoint manages 1.65 million square meters of office space, mostly in South Africa's economic capital of Gauteng. The company noticed a problem well before the pandemic.
During COVID, people worked from home, people were still in leases, but over the year or two following COVID, people gave up those leases or downsized. And our vacancies nationally, both Growthpoint, but the whole South African market really peaked in middle of 22.
Occupancies registered a slight improvement this year, but still remain around 17%. A number of factors are thought to be hampering a recovery, such as a weak economy, higher interest rates, and the slow return of employees to their desks.
There's a lot more hybrid working now. Certain companies allow more of that, and that means that their office space requirements are less than what they were prior to COVID. Also, a lot of us have done away with the reserving of desks for each individual staff member. It's now about hot desking far more and hoteling, where you book a desk space for tomorrow or you don't have one.
High vacancies have pushed rental prices down and forced Growthpoint to rethink its strategy.
The coastal areas are performing better. So Cape Town, we're seeing great demand for BPOs, business processing organizations, and call centers. But generally, there's been a little bit of semigration, and we've seen occupancies pick up in Cape Town. And we are looking to increase our exposure to industrial in the same vein that we look for buildings that perform better.
The office environment has, I think, been the most challenging environment of the big three commercial sectors, industrial being the best performer, retail somewhere in the middle. I think over time, as leases come up for renewal, or if you own the building, some will be sold off.
Power shortages have hurt the South African economy, but it brings a glimmer of hope for landlords hoping blackouts will entice workers back to their desks and restart a strong office culture. Ian Kinyo, CGTN.